on LinkedIn talking about the price of oil. We were just talking about it. It kind of seems like right now, as we sit here, trying to figure out what's going to happen next. One of the things that's hard is to figure out what the new demand models look like. So I know that you're kind of, or at least what I have seen from you, it seems to be more bullish on the price of oil as we round out the end of 2020. Or are you still kind of in that position, or what do you think we should expect for the next few months?
Yeah, I mean, Ryan, that's a good question, and I'm sticking to my guns. My marketing people, at marketing people, not my financial analysts and the people that can really understand supply and demand.
Mm-hmm.
They were like, you're sitting out there, because I wrote the article in Forbes like March 22nd, I think.
Mm-hmm.
March 22nd, I said $65 oil. This is when oil was going to minus, right? I was like $65 oil by the end of this year. And it's because I believe in the numbers, right? And I believe what we're seeing is we're seeing not as many rigs drilling in the United States. We've seen that 1,700 rigs like a couple of years ago down to a couple of hundred now, 200. So we're not drilling for it. And we simply, when these wells decline like they do, these shale wells decline, and we're not putting wells back online, or if we do, they're not coming on, we're going to have a supply problem. And what you mentioned, Ryan and Josh, was about the demand. And yes, we're going to have a growing demand. Our demand is going to grow when everybody goes back to work. Everybody goes back to work, and we get there. Now, I do say that we may not be all the way back to 100 million barrels a day in the world demand. It may be 5 to 10% below. I do believe that people will get everything. Airplanes, I'm not sure, man. I'm just not sure if that part of the business is going to be there or not. So, but you know what? We use oil for a lot more things than just travel.
Mm-hmm.
So it will get back, and when it does get back to, let's say 5 to 10%. Let's say if we need 95 million barrels a day in the world, and the United States is going to be hurting. Extremely hurting, because we don't have the oil that we did. We went from 5 million to 13 million barrels a day in the United States. Just think about that. 5 to 13 million barrels a day. That's a lot of oil per day.
Mm-hmm.
So because of the shale plays, Bakken, Permian, Eagle Ford, all these shale plays allowed us to get from 5 to 13 million barrels a day. So, and we need in the United States over 20 a day. So we need 20 million. We're only producing 13. So, man, and right now we're at 10,
mm-hmm.
and it's going down.
Mm-hmm.
And it will continue to go down. Why? Because we're not drilling for it. There's like $30 trillion, probably not trillion, probably billion dollars was spent getting us from that 5 to 13 million barrels a day. And all of a sudden, oil went to $100 and something a barrel. Now it's coming down. Obviously, it came down below zero. But then now, we're going to need oil. And when we don't have it and we're looking for it, what happens on the price of oil? The price of anything, supply and demand. Why did the stock market go up yesterday? More buyers than sellers, right? That's why the stock market. That's how you can tell somebody, Ryan. You go, hey, man, I can tell you the reason why the stock market went up today. You can? Yeah, heck yeah. Well, because there's more buyers than sellers. That's what's going to happen when we need all that oil at the end of this year. We're going to need that oil, and we're not going to have it in the United States. We may be at 7 or 8 million barrels a day production in the United States. And when that happens, price is going to go up. That's exactly what happens.